Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the bullish consolidation which we are observing in the share price of the MasterCard, the payment processing giant, which is having a fabulous year for 7 for year to date, and it has continued to rise with occasional dips. So if you are someone who has applied the buy on dip strategy for most part of this year, you would be sitting on pretty good amount of profit. And this is the momentum driven upward surge which is likely to continue for next couple of quarters at the minimum, and I feel the buy on dip still remains a good strategy, and for that there are fundamental as well as technical factors which are favorable for these ongoing bullishness to continue and last, and I will be soon explaining to you the reasons why I believe the MasterCard is well poised for further surge from these current levels, and it is a slow moving counter. You are not really likely to see sharp moves in it, but even if it simply consolidates, the slow and steady upward momentum is going to be quite supportive, and you can still employ the buy on dip strategy in it, as I feel this bullish consolidation is likely to last for foreseeable future. So regardless of what is your time horizon, whether you are a short term trader, medium term, or a long-term investor, the strategy is similar. That is not the case more often than not, and as we have seen many stocks in the recent past, we see the divergence of sort happening when you change the time frame. But for the MasterCard, in almost all these three key time horizons, the short term, the medium term, as well as the long term, the momentum is similar. It is slowly and steadily grinding higher, and that is why I feel we have reasons to believe on the steadiness of this upward momentum, and all we have to do is keep looking for the opportunities to buy where we have a risk reward ratio which is favorable for us, because like any other trade, this trade can also go wrong, and if it indeed goes wrong and there is a change of momentum in the MasterCard counter, then we don't really want to lose too much money. If we are wrong, we want to be humble and get out of the position after suffering the least possible losses. So, for that, we will have to first consider what is the story which is supporting these bullishness in the stock, and also what are the price levels to watch out for. So, first thing we do is to consider its quarterly earnings, which came in the last week of October, where it has posted the income, net income of more than $3 billion. To be precise, its net income stood at $3.2 billion for the third quarter of this financial year, with the EPS of $3.39. The one thing which I noted is that it is enjoying the quite astounding operating margin, and also the profit margin, net profit margin is more than 50%. There are not many businesses where you see this kind of profit margin. In many of the other businesses, the margin is wafer thin, and if you look at the retail business in particular, there the margin is many times even less than 1%. But the financial payment processing is segment where there is sort of duopoly of these two payment processing giants, the MasterCard and the Visa Inc., for which we saw the assessment in the last session yesterday itself. Now we are going to look at what is happening in the MasterCard. MasterCard has also had similar trajectory. It has also rallied and continued to rally higher and higher. We saw similar outlook for the Visa Inc. as well. And the story here is somewhat similar. The only thing is that the net income for the MasterCard is slightly on the lower side, and also its net revenue, total revenues are also slightly lower compared to the Visa Inc. But the operating margin, the net profit margin, and the kind of business it has seen and the growth trajectory for year on year as well as in sequential terms is not very different, and that is because these are perennial competitors, and we have seen over the years, over the decades, the results haven't really differed much. Of course, one is a leader and another is playing catch up most of the time, but these two companies are close competitors, and also with this duopoly kind of business, the stability is there, and there is a business with high barriers, and not many new players keep coming in because of the trust issue involved in the processing of financial transactions, and as a result of that, these are the companies which have been in this business of very high net margin without having to suffer too much competition. So, in this kind of scenario, there has been 14% increase in the net revenue for the MasterCard year on year. Its net revenue now stood at US dollar 6.5 for the last quarter, for the third quarter of this fiscal year. The dollar volume was up 11% and the purchase volume was up 12%. This is also a remarkable achievement, remarkable development for the company. Now, instead of looking at these snapshots of the quarterly results, we go to the consolidated income statement, and there I will be able to better explain to you what is the story for the company. This is a consolidated statement of operations, and here you can look at the net revenue figure, which stood at US dollar 6.5333 billion for the 3 months ended September 30, where it has seen more than 10 percentage point growth, with the revenues having risen from US dollar 5.756 billion year on year. The operating margin is somewhat similar. There is not much of a difference in the operating margin, but there is improvement in the operating margin as well for this year. After deducting the interest and expenses, we get the net income for the company, which is just around 100 million lower than its operating income. So in this case, that simply shows that there is not much of a debt on the company's book, and as a result of that, the amount of interest it has to service on that debt is quite low, and that is giving us these more than 50% operating, the net income, and that is a remarkable net income margin, net profit margin. With this net income of $3.2 billion, the EPS stood at $3.4, which was, if we look at the growth of the net income, the growth was more than 20% for this year. So year on year, the net income has seen this quite a solid growth. Coming to the cash flows, the company has generated substantial cash and it has used that cash to purchase the treasury stock. It is continuing its buyback plan, and only yesterday we got the fresh announcement that the company is going to embark on a new stock buyback plan after the ongoing buyback plan comes to an end. So it is trying to boost the shareholders' returns, and also at the same time, the Mastercard has revised its dividend payout higher. With this growth, it is indulging in the shareholder friendly activities, and that is also making it the darling of the shareholders. With it rallying higher, the stock is almost 1 percentage point up in the last two trading sessions. Now we go to the technical side of the story to see what is happening there. So in the short term, the stock has continued to make these higher highs and higher lows. After starting the day higher, it gave up those gains and it tried to fill up the gap which was formed after the gap up open. But after that, it has stabilized and it is not really moving much for last couple of hours, and I feel after having stabilized around this level, we can keep an eye on how things unfold for next day or two, and if it doesn't really decline much below the 400 level, I feel we will have chances of it again rallying on the higher side. So watch out for the kind of price moves which you observe over the next two to three trading sessions. And if it continues to oscillate and move in the range in between 405 on the lower side to 415 to 420 on the higher side, we can adopt a buy on dips approach from the short term horizon. And I feel looking at its current trajectory, there is not likely to be a sharp move on the lower side, and we can indeed take our chances and have the odds in our favor for these buy on dip strategy. For the longer term horizon, the trajectory is somewhat similar, only the time horizon is going to increase. So for the medium term perspective, the formation is also conducive for a buy trade, but after having seen its rally of around 15 percentage point from its recent low since the release of its earnings, where the stock had nosedived around 5 percentage point, there has been sharp recovery and it is still in a favorable scenario where it has this tendency to keep rising, and I feel that this ongoing bullishness is also likely to persist for next couple of weeks. So in that case, adopting the buy on dip strategy is going to be desirable positioning. and looking at its sharp rally, I don't really feel that going for a long trade at the current juncture is advisable or favorable from the point of view of risk and reward. But if you can wait it out, and if you are lucky enough to experience a fresh correction from the current levels toward 380 and 390 levels thereabout, if after long consolidation, after having seen stability come back to the stock moves, we can take our bets and try to buy in this price band for the next move higher. But currently, it is not really offering us a good risk reward ratio, and only on that count, I would suggest you to sit on the sidelines if your time horizon is for a couple of months, and if your time horizon is longer than that, even in that scenario, the better decision to take is to buy. But when to buy, that is a difficult question. And looking at its price trajectory, I feel that for the longer term, the price range of around 350 thereabout is going to be crucial moving forward. So for longer term, we will have to wait for a month or two before we can find favorable opportunities, because after having seen sharp rally of around 15% from these recent swing low, the momentum remains bullish, but whether it is strong enough for us to provide significant opportunity of rallying from the current price level, I feel that is a bit of an difficult scenario, and it is going to be better for us to take a cautious approach and opt for a conservative stance where we take the price level of around 350 360 as a crucial support zone, and want to buy the stock of the Mastercard if it sees a correction from the current levels, and after due consolidation we can go ahead and buy the stock for next couple of months, next couple of quarters as well. So that is my outlook, looking at the technical as well as fundamental side of the Mastercard's business and its current strategies. And looking at that, I feel confident enough for suggesting a buy on dips approach, and both the fundamental and technical will have to be considered, and we simply have to go for a risk reward ratio which is favorable to us, and keep in mind that no trade is sure shot. There is always a possibility of things going wrong, and if it that unfolds, if that happens, we don't really want to be losing too much. We want to simply cut back on our losses. So keep these things in mind. Now it's time for me to wrap up the session and sign off for today. Before I do that, I would also like to remind you to subscribe to the channel, watch the content, and there are similar streams happening by other webinar hosts as well. You can also go through the other sessions of these daily stock series where I have considered the prospects of various major companies, and I am going to keep doing that for next many days and more. So if you show some love, subscribe and like our videos. So now I'm signing off for the day. I will be back tomorrow for a new stock to work with. Thank you all for joining in. Have a fabulous day ahead, a profitable day ahead. See you next time around. Goodbye.